Hi, everyone, and welcome to episode number 26 of the VC React podcast. Every week, we bring you insights and reactions from top VCs, LPs, and angel investors, react to the latest news on startups, VCs, and investment rounds. Let's jump into it with our amazing guests for today. Qtaishat, investment manager at AB Ventures, and Feras Safwan, investment manager at Aramco Ventures and host of FWDstart podcast. And as always, my co-host Jamie Lane from FWDstart. In the video description, you can find more details on our guests, their LinkedIn profiles, and links to the company's website. And we will also add a link to FWDstart podcast. Our weekly news are brought to you by FWDstart, a twice-weekly newsletter that breaks down what's happening in the MENA startup, VC, and tech space. Last week, we started unpacking the news that was announced at Leap. And this week, we will cover all the acquisition news. And believe it or not, we have 5 acquisition stories, and they're all regional. And we also have a new global VC opening shop in the region. Jamie, how many acquisitions did we cover last year? Do you remember?
Oh, not many. I mean, it was
Not
in
many.
the. I could definitely count them on one hand, probably with 2 or 3 fingers. I don't think I needed to even exercise my thumb. So
I
it
think in
it
one
was pretty
episode
minimal.
now, we will cover more acquisition
Oh
stories
yeah,
than we covered the whole year last year.
no, 100%, no doubt about it. I mean, there were very few and far between, for sure. And I think there was weeks, if not months, between them for the
Yeah.
most part. So yeah. A change of pace, definitely. Difficult to know where to start on one level. Maybe we'll start with, I suppose, perhaps the biggest of them, Salla, who've acquired Sweply. So Salla, e-commerce platform provider. So they've acquired Sweply, a Saudi-based digital advertising platform for an undisclosed sum. Following this acquisition, Sweply is going to be rebranded as Salla Ads. It's then going to be integrated as the official advertising platform within Salla's own ecosystem. I suppose some context on Salla, for those unaware, founded back in 2016, enables merchants to set up their own online stores within hours, sort of the region's answer to Shopify, if you will. Recently raised 130 million in a pre-IPO round in March 2024. That's up participation from Sanapil and STV. And then Sweply, founded back in 2021, serves over 35,000 registered advertisers, so a sizable ecosystem there as well. And interestingly, Salla actually previously invested in Sweply's $2 million seed round in June 2024 as well. So there's been an element of premeditation as far as all of this is concerned. I think the new service is expected to go live on the Salla platform in Q2 of 2025, and existing users will just continue to operate without disruption during that transition period as well. But exciting times as far as Salla is concerned. And look, we might see more M&A activity as that IPO inches closer. I would think. I wouldn't be at all surprised.
Very exciting news. And it seems that many big companies now are preparing for their IPOs. We'll talk about Dubizzle later on. But it's been a while since we talked e-commerce and e-commerce infrastructure. And we have big news from Salla. It's weird that startups are investing in companies. And while they are still startups, they're acquiring companies. We'll talk about that later on. But let me start with this. Amazon, Shopify, and other global players have built advertising ecosystems. It seems it's working. They're generating huge revenue streams from that. Is this a sign that Salla is becoming a global player or playing the same game? And how big can e-commerce driven advertising becomes for Salla?
Sorry to jump in.
Go ahead.
I agree that those who predicted that 25, 26 as a major time for consolidation in the MENA tech ecosystem got it right. This acquisition is a clear signal that the M&A market is heating up and it's running at full speed. But here's my take on Salla's acquisition of Sweply specifically. I see this as a strategic repositioning and expansion into the ad tech. I believe, as you mentioned, Ahmed, as Salla matures and prepare for an IPO, it's clear that they want to reposition themselves beyond just an e-commerce enabler platform. Instead, I think they're signaling to the market that they're evolving into a full stack e-commerce solution. And this move positions Salla against global players, as you mentioned, the Shopifys of the world, which also integrate advertising into their platform. However, there is an interesting twist here. Shopify integrates with Facebook, Meta, or Alphabet, Google Ads, leveraging the existing ad network. On the other hand, Salla chose a localized embedded solution with Salla Ads. It will be interesting, in my opinion, to see how this strategy plays out. Will merchant prefer an in-house regional solution over global platforms? And the key question here I'll be watching, can Salla Ads outperform Google and Meta in terms of, let's say, the return on investment locally? It will be a challenge to convince merchants that running campaigns through Salla, that's more effective than the traditional digital platforms. I think the adoption will tell us a lot if this campaign performance will ultimately determine the success of this move.
Sweply, by the way, helps merchants advertise on YouTube. So they integrate with YouTube. I don't know about Facebook and other platforms, but they do have ads on YouTube. Dan.
Yeah. I mean, I agree. So they are positioning themselves as an all-in-one e-commerce solution. They're expanding into a comprehensive merchant support platform. As Feras said, this could be seen as a regional move to compete with Shopify. They also have advertising tools, but Amazon ads businesses, they have their own advertising tools. They help sellers promote their product. With the acquisition, I believe this will be a built-in advertising tool. It will enable easier marketing for merchants because it's within their platform. They can optimize and run their campaigns without needing third-party ad platforms like Meta Ads or Google Ads. So I'm assuming this would increase their conversion rates throughout the platform. Since it's built in-house, should come at lower costs. We're yet to see. But I don't know if I've seen this, but I'm not sure if it applies to all e-commerce solutions. But almost 50% of their COGS is advertising spend. So if it's built in-house, it should come at lower cost. It should increase conversion rates and engagement. For me, Salla, they are inclusive because they already, from a fintech perspective, since we are a fintech-focused fund, they already are integrated with Tabi and Tamara. However, in the future, I believe they could also offer revenue-based financing. They try to have a holistic coverage of the merchant needs. But yeah, we were yet to see that. I would like to, since we're discussing acquisitions, and you said like this is like the largest number of acquisitions you'll cover in this call. Maybe it's good to see that this trend is happening more in our region. I am in favor of strategic acquisition that either offer specialized services or access to new markets. And I have been seeing it. I have been seeing companies expand through new markets in the Middle East through acquisition. So in terms of integrating specialized solution, we will be seeing this more because acquiring an existing provider of a solution that a company needs will allow the company to avoid the risks and costs of building in-house. So basically, they're avoiding reinventing the wheel. Instead of investing time and resources in R&D, hiring, testing, a strategic acquisition will provide immediate access to a proven scalable product that's developed by founders who live and breathe their niche. It will accelerate the market entry, but it will also grant them access to the acquired businesses' existing customer base. In terms of new markets, local startups, they know their market dynamics, regulation, their customer behavior. So M&A provides a faster and more efficient entry strategy. In fintech, this is relevant because they provide also faster routes to market entry. Instead of navigating complex licensing processes, building compliance from scratch, they can easily integrate, not easily, but I mean, they can integrate with an existing player, accelerate their operation efficiency and expansion. So I believe we will be seeing more of acquisitions for growth and expansion.
Right, Dana, let me stay with you. Related to this, let's talk about Shopify. When I saw what Salla claims to have, they claim to have 63,000 active stores. I thought this is a big number, this is a lot, but then I looked up how many stores Shopify has, and I realized Salla still has a long way to go. In Shopify, they have 5 million active stores in 175 countries. Of them, there's only less than 4,000 in Saudi. So here's the question. Should Shopify, if they want to expand to Saudi, should they acquire Salla or maybe Z, or should they build their own, or try to compete and get more active stores from Salla and Z?
The easier way would be an acquisition, but it depends on their abilities. Since you said basically they're globally dominant, but I mean, if it's easier or cheaper for them to duplicate their solution in the Saudi market, the Saudi market has its own licensing requirements, its own compliance requirements. So the easier path would be to acquire, as I said, Salla, get access to their customer base. It would be, Salla would be an acquisition target for them. They would make money out of this. So it would be a win-win for both. But if they have a cheaper way, an easier way to expand in the Saudi market without acquisition, they might do that as well. But in this case, I also believe that acquisitions are easier and faster.
Yeah. Feras, what do you think? Last week, we talked about some fintech companies in Saudi that are too big to be acquired, and they're eyeing an IPO. They're not interested in any global acquisition. What do you think about Salla? Is it too big to be acquired, or they can be? They're still too small compared to Shopify?
I think the latter. I agree with Dana. I think that's possible that Z and Salla would be a target of acquisition by Shopify. It makes sense. They already have the first mover advantage. They're already in the market. The merchants know them. They have the local flavor into the market. So I would say it's possible that they will be an acquisition target for Shopify. But I think as they got it, and that's why they've been doing consolidation and trying to ramp up the acquisition in order to complete the IPO story and go public. But possibly that would be a good exit for the founders and the investors if they can be acquired by a global player like Shopify.
What I like about Salla is their transparency. They have the numbers out there. And last week we talked about Lindo and how they are really transparent with their business model, numbers, everything, even the return on investment for their own investors. And I like that transparency about Salla. Yeah.
Lindo is a portfolio company of ours, so I will be buying. It's my investment deal. So yeah, they're amazing. I mean, I love the founders. They're actually efficient. So it was one of the easiest transactions that we did because they're very cooperative and they're doing really well. They cracked the market, they cracked the gap. And look, you discussed this news in the previous episode. The 600 million credit line that they signed, yeah.
It's
Lindo
amazing.
is a star, yeah.
Yeah. For me, let me add some predictions here. And maybe in 2 or 3 years, we'll see how it goes. I think Z is more of an acquisition target for Shopify, but Salla will go public. They will not settle with an acquisition. I don't know. Just a speculation here. Like for e-commerce founders watching this, what's the bigger opportunity today? Building a platform like Salla, or trying to compete with them by creating a niche SaaS solution, or maybe something else? What do you think is the next big thing in this sector?
I would say an add-on to Salla and Z. We've seen this acquisition, which makes sense that they want to get into the ad tech or the ads part of the business. So I would say I would keep my eye on e-commerce enablers. So not the infrastructure, the second layer, which is the apps or the platforms that will be built on these platforms in order to expand the growth of these platforms.
Dana, what would be a good e-commerce related company that you would consider investing in?
I mean, so personally, so we're a fintech focused fund. We don't do e-commerce, but I mean, since we're a fintech fund, I would invest in e-commerce platform that have embedded financing solutions in them because we're strategic. So anything that could benefit Arab and give us exposure to their market that they're operating in, or maybe utilize their technology for our own use case. Whether it was a new commerce players or ones who would want to integrate with Salla or Z. Again, I would invest in any commerce with a fintech angle to it, a fintech element that has also scaled and generated the revenues that validate their scalability. For e-commerce solutions that want to launch in the Saudi market, also, they could become acquisition targets by Salla or Zed. So they should offer features that are not tapped by either companies.
I'm surprised none of you mentioned AI, the
The
buzzword
AI
today.
is everywhere. It's a buzzword.
Yes, yeah. I think last week or the week before we talked about an AI play on e-commerce with Keen, Jamie,
Yeah.
right?
Yeah, we did, absolutely. Yeah, for sure.
Yeah.
Who
I don't
knows?
know if you guys noticed, it's mentioned in the press release of Salla acquisition that there is an AI angle to it, which is I think
Personalization, AI personalization. Yes.
the ad targeting. I really hope that AI element they mention here is real in terms of targeting ads, because this could be or could lead to better conversion rate and lower customer acquisition cost, which is a major win for their merchants, as this will strengthen Salla's value proposition in the competitive e-market or e-commerce market.
Yeah. Okay, we have a lot of acquisitions to cover. Jamie, what's next?
Yeah, let's keep the ball rolling with another Saudi startup that seems on the precipice of an IPO. So let's chat about Foodix. So they have, in a cross-border acquisition, they've acquired a UK-based Solo Ventures. So they're a self-ordering kiosk and app specialist. Some context on Foodix, founded back in 2014, most recently raised a whopping 170 million Series C, I think back in 2022. That was co-led by, I think it was Process and Sanable Investments, and I think it was Sequoia India here now. It was a Peak 15. They've rebranded, haven't they? And look, they're no strangers to M&A as well. Back in 2022, they also acquired POS Rocket, the Jordan-based POS service provider. Interestingly, in 2020, I think they got a SAMA license as well for electronic financial transactions, which maybe provides a clue, directionally speaking. Back in 2024, I think that the CEO, Ahmad Zaini, mentioned that they are planning to IPO. I think he mentioned something like 30%, at least 30% of its shares on the Tadul by late 2025. And interestingly as well, and I think worth chatting about maybe initially too, they also mentioned that they're investing in 3 startups. So Norma, a Greek AI-powered data analytics firm, Add, an accounting firm from SMEs, and then Arzag Plus, an AI-driven supply chain platform. And they've also announced a 100 million fund for acquisitions in fintech, AI, and tech over the next 3 years. What do we make of this approach where we're dipping our toes in the waters as opposed to fully acquiring?
So allocating a 100 million fund for investment and acquisition is a game changer for Foodix. What's particularly noteworthy is their hybrid approach, combining venture investments with outright acquisitions. This signals that they're not just looking for mature, profitable companies, they also recognize the strategic value of early stage innovation that aligns with their long-term roadmap and goals. This mirrors how Amazon, PayPal, Stripe, they have successfully invested in early stage startups and later fully acquired them once their value became clear. So Amazon, they invested in Dux and then acquired them, in Ring and they acquired them, and the list goes on and on. With the early stage acquisition.
But Foodix is not as big as Amazon and all these companies, right? It's still a small startup.
Allocation.
They're not public yet. And they're raising $100 million fund. They're competing with you, VCs, right?
I mean, this is new. This is not something that we see every day, but I mean, it's good for them, honestly. This is good for them. They have the allocation. So doing this not only help them grow, but they can unlock innovation in companies that are early stage. We have seen companies acquire early stage businesses that are not yet public. I mean, the acquirers are not yet public. It actually works. It actually works. And the early stage acquisitions, they make more sense in the Middle East, especially in fintech lending, transformational AI. These are covered in the article that you shared. Robotics. So basically, because these sectors are still emerging, they can acquire mature companies elsewhere and bring them. But if they are focused on the Middle East and they want innovation in-house or in the Middle East, they might not find many late-stage acquisition targets in these fields within the Middle East. So basically, it makes them a strategic move, let's say, a necessity. These startups may be small, they have, but they bring disruptive technologies, specialized talents, proprietary IP, but they're they're also cheaper. And they have a first mover advantage. So it makes sense, honestly. It's not something that you see a fund, company raising a fund for acquisitions, but I believe it will be good for them. It will help them grow at an accelerated pace relative to its peers.
Yeah,
Feras, what's your reaction to
I
hearing
totally
a startup
agree.
raising $100 million fund?
Yeah, this is unseen before. And I totally agree with Dana here. And again, once again, this signals that the expansion through M&A is in full swing in our market. FoodX specifically is no longer a restaurant tech. It's evolving into a broader business solution provider, as you mentioned, through getting their SAMA license and through expanding beyond restaurant tech. I think investing in fintech, data analytics, accounting, supply chain suggests that the strategic shift toward a full stack platform for F&B and wider SME market. And this mirrors the trend where companies like Toast and Square in the US expanded beyond POS. So it's a natural progression. So they expanded beyond the POS solution into fintech and business automation. As you mentioned, what really caught my eye is the 100 million acquisition fund. This is a major milestone for a Saudi ecosystem. A Saudi startup deploying 100 million for acquisition in fintech and AI is a big deal. This level of capital deployment has substantial and unseen before in our region. And I think this move hopefully will set a precedent for other Saudi and GCC startups, encouraging them to adopt a similar M&A or buy and build strategies rather than relying solely on organic growth. And overall, I think this signals that a new phase for the Saudi startup ecosystem, one where a local startup is just not only scaling regionally, but also acquiring international tech, as we have seen in this announcement, to strengthen their market position.
If I was a founder and I have two options, I get investment from a startup, from a founder who understands me more and who is in my industry. Do I choose that, or do I choose other investors who would support me financially and maybe from other value add? Which one would I choose? I don't know. But this, for me, this is really big news, because we're talking about startups, not only acquiring companies, they're investing in companies, right? And it's still a small company. And the $100 million number is bigger than VC funds. I know VC funds in Saudi and in the region, there is 20, 30, 40, $50 million. But this is a startup. And I wonder, who are those LPs who invested this money?
To answer your question on whether or not you should choose a competitor as an investor or a VC fund, it depends on your goal. So basically, if you are looking for strategic synergy, if you want to be a potential acquisition target, if you want the industry expertise, it's better to go with a competitor, but you will have risk of control. So basically, you don't want to, and also information, and you don't want asymmetry. Basically, they would know a lot about you more than you know about them. So there would be control issues.
Yeah.
When it comes to a VC fund, so you will have growth capital. VC funds, they mainly invest in growth. You will have access to their VC network. If it's a CVC, you will have access to their markets, and you will be more independent than having a competitor on the cap table. But it depends again on your goals.
Yeah, I totally agree. It all depends on the stage, I would say, and the synergies. If it's an early stage company that has potential to grow further, I would choose the investment or VC route. If it's already matured and if I see a lot of synergies, as you mentioned, Dana, I think it makes sense to partner up or get acquired by a bigger player who would add value to this partnership.
Let's move to something we rarely talk about, social media and MENA. Jamie.
Yeah, social media. We definitely don't speak about that particularly frequently. So we have Saudi-based startup Social, which is a great name, has acquired Pubbles, another Saudi social media app. So in terms of Much Social, I found it back in 2022. It's a social platform essentially that allows users to earn points and own virtual assets through a sort of map feature. So it kind of turns interactions into financial returns. And then on the other hand, Pubbles, they've sort of developed a kind of interactive virtual community sort of thing, whatever that necessarily entails. In terms of Much Social as well, they're very early on their journey as well. I mean, it was only back in November they actually raised their pre-seed round, which was $1.2 million. So yeah, this is one of those acquisitions that you know, not
Seems
entirely
like
clear.
more of a merger than an
Yeah,
acquisition.
I think
Yeah.
so. I think so. Yeah, exactly.
I tried, not too hard, but honestly, I tried to go to the website of Pebbles. I could not find it. Not even on LinkedIn. Not even a LinkedIn page. Were you able to see the website, Jamie?
No.
No. Yeah.
It was
I
difficult
was able to find Much Social, but not Pebbles. So I don't know. Maybe it's just something that have not been launched yet, and they thought there's that synergy between the teams, and they just merged together under
Might
the
have
Much
taken
name.
it out after the merger.
Or maybe,
Might
yeah,
have taken it down. I mean,
maybe, yeah. So, do you think MENA has room for a local social media success story, or this is just another nice try before people go back to the traditional social media? What do you think?
as you said, we don't usually cover social media. I mean, it's good that there are initiatives in the market. So basically, this could enhance their community-driven content. I think probably they have an AI-powered engagement tool. I'm not certain, but integrating that would be a plus for Mush. I'm not an expert on the subject, but I believe it would such acquisition would position Mush to appear as a stronger competitor in the regional social media landscape. With regards to competing with social media platforms like Facebook, Instagram, TikTok, honestly, I don't know. Maybe again position Mush to become a target, an acquisition target, but I don't know if they would be able to compete with these massive this giants, this social media giants.
Feras, what does it take to create a social media success story out of MENA?
I would say the keyword is the network effect. This is the biggest barrier. I agree with Dana, and I'm not an expert in social media. We don't invest in social media, that's why. But I think this is exciting to see a homegrown social media. As you said, it might be a nice try, but I don't believe that we have what it takes to get a success story against the global giants like Facebook, Instagram, TikTok, and Snapchat. But as we said, the social media thrives on the network effect. And the more users on a platform or a platform has, the more valuable it becomes. So I don't think we are ready yet in this region to convince millions of users to switch to more homegrown social media platform.
Do you believe in those virtual realities and social and digital assets? I think 2 days ago I was having this conversation with someone, an angel investor, who was telling me about, how come we don't hear about those virtual events anymore? In COVID, we heard a lot about those exhibitions, virtual exhibitions. You get into the website and you see booths, and you can go there and talk to someone, and you see their avatar, and they see your avatar with your face or your head on top of it. How come we don't hear about them anymore? What happened to those companies?
Talking about AI mainly now. AI is the trend.
It's true.
Jamie, yeah.
They were terrible. That's why.
Yeah.
I agree. I couldn't agree more. I never believed in such platforms, honestly. It was like temporary. I think the hype was during COVID, but now they're purposeless, in my opinion.
Yeah, it was a hype. If you notice, even Facebook itself switched to Meta, and there was all about the metaverse. Now, even Facebook itself has shifted from being a metaverse advocate into more back into the what really matters. So I think it's a short-lived before after COVID, and it doesn't make sense anymore to most investors that I talk to.
Yeah, maybe if we have another pandemic, I don't know. Jamie, what's next?
I was going to say, Facebook is a fifth to what matters, needlessly sticking a little AI icon into my WhatsApp for absolutely no reason, which serves zero use
Honestly,
or purpose. Oh my God.
absolutely. Yeah, definitely. Like, why? Why is it there? I don't think like anyone has used it, yani, unless they wanted to see what it was about. But again, purposeless.
The most puzzling integration for a company of this size and scale and the investment that they've made into AI, for it just like there'd be no real actual practical agentic use case for it whatsoever. You just get to ask it questions you could ask Google or ChatGPT. Anyway,
pushing it on you. They're pushing it on you.
Anyway, completely
Maybe
against
if
the
you ask
ethos
it
of
to create
WhatsApp
a
as well.
sticker for you, like
Oh,
make me a
yeah.
sticker.
Yay, a sticker.
Yeah. Okay.
Dear. Anyway, okay, let's not. We can speak about that for the remainder of the pod, but I don't know if everyone wants to listen to that.
Yeah.
Look, two more acquisitions, and maybe I'll run them together in the interest of time. So we have T2, a Saudi-based tech services and solutions provider. They've acquired a majority stake in Mula, that is also a Saudi-based startup. So they offer a platform that provides corporate business cards and sort of automates financial processes and the like. And then the second one, which I'll maybe dedicate a bit more time to as well, and I know you foreshadowed, Ahmad, at the start, was Dubizzle. So they've acquired the Egyptian online car marketplace. I'm going to mispronounce this. It's not entirely obvious to me. Halta Tui. Have I done a horrific job there?
هتلاقي.
Oh,
Yes.
okay.
It means you will find.
See, I don't. This is the unfortunate thing. That's why I hate that. I do it first, and I always get the names so terribly wrong, and then I have to listen to you guys discuss the names pronounced so correctly. In any case, yeah. So they've it's the second acquisition. They really seem to be doubling down on the sort of automotive vertical. Even I know last year Dubizzle also acquired Drive Arabia, so really sort of consolidating their position in that in advance of an IPO, which looks like it's going to take place in the UAE at some point this year as well. I think they've already mandated some financial institutions to that end. I think they've earmarked that they're hoping to raise between 500 million and 1 billion through that offering too. So another IPO on the cards, which I'm sure we'll discuss plenty more in the months to come as well, Ahmed. So we can look forward to that.
Let me start with Dubizzle. It's easy to understand. It's in the classifieds sector, and they're acquiring another classified website from Egypt. They're expanding regionally. They're trying to compete with the others like OpenSouq, Property Finder, Beirut, and all of these. It's easy to understand because they're preparing for an IPO and they want to expand. I'm not sure about the T2 one, though. First, honestly, I don't know what T2 does. What's their core service? I know that it's a service company, not a product company. And they do services to governments, to big corporations. But now they're acquiring an expense management tool. Why?
I've very little idea as well. It's one of those things where it's very difficult to discern exactly what they do. Again, it's technology sort of solutions provider, and that encompasses, I don't know,
a lot of things.
I mean, they want to strengthen their fintech capabilities. I honestly don't know T2, but I've seen a similar trend. Yani one of our portfolio companies wanted to acquire an expense management platform. This would position them for a deeper enterprise integration in financial operations, expand on their offerings. But I don't know T2, honestly. It's difficult to go to your question. I mean, in my opinion, both deals they reflect and emphasize on what we talked about earlier. Regional consolidation trends. They're leveraging M&A to expand, to deepen their market presence, and enhance the innovation and their tech capabilities.
It might be an acqui-hire. Maybe they like the tech team and and they just want the team. So back to Dubizzle. We say okay, it's understandable. They're preparing for their IPO. They're expanding regionally, but as classifieds still a thing, Dubizzle has a very long journey. I don't know, more than 10 years, I guess, right? It's more than 10 years.
Yeah.
And now they're preparing for their IPO in 2025 with these acquisitions. I'm not sure if even if they go public, is it going to grow? How would a classifieds business grow? What do you think?
Where would they go public?
I think
What
in
is the
Dubai.
targeted
Dubai.
market?
Is
Okay.
classified still a thing? What do you think, Dana? When was the last time you used a classified website?
I don't know. Honestly, I don't recall that long ago. I honestly don't know. I don't recall.
Jamie, you're in Abu Dhabi and in the UAE. Do you use Bibizzle or others?
Yeah, like
You do?
funnily
Okay.
enough, I think given sort of being expats to the region as well, I think Dubizzle is sort of that first platform that you go to when you're trying to furnish your house, especially, and you're not
Okay.
entirely sure whether you're staying here for 6 months or you're staying here for, it's been 4 years now. So perhaps I wish I hadn't gone on Dubizzle and I'd invested in furniture that would have lasted the length of time that I'm here. But yeah, for sure. But look, I think the doubling down on the automotive side of things probably makes a lot of sense, given the higher ticket size as well, and just given definitely Abu Dhabi's affinity for motor vehicles in particular. And look, there's some who's the other platform provider in the region as well. Cars24, I know, are pretty prolific as well. I think they're originally India based. I bought my car via that platform as well. If anyone from Cars24 is listening and would like to either sponsor the show or provide me with a discount on my next vehicle, I would gladly accept that. But yeah, no, the Bizzle is, look, you Facebook Marketplace as well. Like, I know that's extremely popular regionally too, and obviously they have that advantage in terms of being that sort of, you know, integrated sort of ecosystem there. But I think there's still a room for it. But to your point, where is the growth going to come from? I think it makes sense that automotive is a route they're really doubling down on.
Property also is something big.
Yeah.
I should maybe highlight this. So we are investors in a company called Invigo. They are the Netflix for cars. Yeah, they're transforming car subscriptions in the Middle East, and they're growing quite at a fast pace. But they're different because they do basically car subscriptions. We've invested in them like maybe a couple of years back. It's a different model. You subscribe, upgrade, cancel your car all through the app. They can do maintenance. Everything is done through their app. But why we invested in them? They're basically in the mobility sector, but they have financing partnership. They do have a subscribe to own offering. They're live in the UAE and in Saudi Arabia. So such models, they do work, and you can add a lot of you can have a lot of add-on features on that. This is a car subscription. I don't know if Dubizzle and the Hatla'i partnership, they want to offer something similar. It's quite broad from it, but I mean, this move should allow them to capture more transactional revenue and scale their ecosystem.
Question, Ahmed, about classifieds. I will answer that question from two different perspectives. First of all, I'm a car guy, so I'm always on Dubizzle, although I live in Saudi, but I shop for cars as a collector in Dubai or UAE. So my point of view is that these platforms are here to stay. So they dominated the markets. The Haraj, here in Saudi market, Dubizzle and in UAE market, they already established a very huge user base, and they're here to stay. I don't see them going away. But from an investor point of view, I agree with what you mentioned here in terms of scalability. What's next? And how would they monetize their model? For this acquisition specifically, I think, given Egypt 113 million people and growing digital economy, the market is ripe for disruption. They have a high growth market for online classified cars, and Dubizzle acquisition makes sense because the used car transactions are booming, and a lot of people are shifting from the offline fragmented market more into tech-driven platforms. So I think this makes sense in terms of an acquisition.
Yeah, makes sense. And I was just questioning the general classifieds platforms. I see success in specialized ones, like for cars, for example. For property, they can add on different services, and they're known for this. But the general ones, I think Facebook Marketplace would conquer all of these general uses for classifieds.
But not here locally.
Yeah.
I lived in the US. It's right in the US. The Facebook Marketplace makes sense, But here, in the local region, take it from me, I'm a local. I think the Haraj and the Dubaisal of the world will still remain the biggest source if you to list anything in the market.
Yeah, similar to Open Souk in Jordan. So we have Open Souk, and you can list anything on Open Souk. I don't know the growth for this market. You can't but what's next for them? But you can list anything on that market. So what else if they can pivot into something else, add more features? Honestly, I'm not aware of that. Maybe again they could add financing. I think they actually have financing on their platform with Ittihad, with Ittihad Bank. But they can add more layer of financing from a fintech perspective. But I don't know what's next for these platforms.
Okay, so for our last story for today, Jamie, what's happening in Qatar?
Yeah, let's chat some VC. Let's nerd out on that for the last 8 minutes or so. We'll allow ourselves that. Yeah, so look, it's the second publicly disclosed investment by QIA out of their $1 billion fund of funds program. The first being Rasmal Ventures, homegrown VC a couple of weeks back. This time it's an international VC, so it's Silicon Valley-based builders VC. That's what they're going to be opening a new office in Doha. They specialize on the early stage side of things across sectors like healthcare, industrials, real estate, agriculture, but very much sort of on the deep tech side of things, which I think is super interesting and sort of chimes as well. I know the sort of primary focus of this particular fund of funds is tech, but also healthcare, explicitly name checked as well. In terms of some info on builders, this is their third fund that they're raising at the moment. Previous funds, 2017, 171 million. Second fund was 2021, 250, and then this third fund they're targeting $400 million. Some really super interesting portfolio companies as well. Looking at the construction tech side of things, healthcare. They've also backed, I don't know if you've heard of Colossal Biosciences, that company that's trying to bring back the woolly mammoth. As far as I know, and they're focusing on the sort of de-extinction and species preservation side of the equation. But look, I think it's interesting in terms of potentially providing a viable alternative, I suppose, to your Abu Dhabis and your Dubais, because I suppose they're playing catch up to a certain extent as far as maybe the GCC startup ecosystem is concerned. But I think it's an interesting development. Maybe they're trying to position themselves maybe as that deep tech sort of launchpad as well, given that sort of longer horizon involved and more patient capital, which sometimes isn't necessarily as available regionally yet.
For Builders VC, I think it's a perfect addition to the MENA region because they focus on modernizing traditional industries, as you mentioned, construction and health tech, and they have some really big success stories in the US. I mean, one of their companies, Carbon Health. I used Carbon Health in California.
Oh, no
It's
way.
an amazing company. Yes, it really streamlines the process, and you just go there and you don't care about anything else. They have an app. You book on the app, and sometimes you can have the call with the doctor on the app. It's made our life so much easier in California. And they have other success stories in other industries. What do you think, Feras, Dana?
I think if let's talk about the bigger picture here. I believe this is a great development for our ecosystem. This marks a shift from being the source of passive capital to becoming more proactive force in the ecosystem building and innovation. Historically, MENA has been has been seen as a capital provider rather than innovation hub, and this is changing.
Yes.
The likes of Builder VC isn't just investing remotely. Based on the press release, it's setting up a physical presence in Doha, and this shows confidence in MENA startup ecosystem. And again, this signals that global venture firms see the region as a ripe place to build, not just to fund. And back to the deep tech angle of it, it's worth noting that the deep tech is still underfunded in MENA. While fintech, e-commerce have dominated the MENA VC scene, deep tech sector like AI, industrial tech, biotech remain underfunded. Overall, I think this partnership between Builders VC and QIA suggests a serious push to change that, position the region as a deep tech launchpad. And I really hope that this could fill the major gap in the R&D heavy startup that traditionally struggled to raise local capital.
Yeah. I mean, there's another news, a fund called Utopia, the UK-based. They also got funding from the Qatar Investment Authority to expand into Qatar. They will be sector agnostic. I believe it's 100 million. I'm not sure about the number exactly, the size of the fund, but I believe they will be investing. They will be sector agnostic, but mainly focused on fintech. Similar to what Feras said, I believe this is shifting the VC flow, the venture capital flow from outbound to inbound. This is similar to what Singapore and Hong Kong did historically. So basically, such initiatives will have the Middle East become a global venture hub in the future. So I completely agree with Feras. Historically, MENA investors, they backed Western tech startups. Now, sovereign wealth funds and corporate VCs, such as ourselves, STV, WAD, they're reversing the flow. So they're bringing top-tier global innovation into MENA. We did, as AB Ventures, we're doing the same. We've invested in US, UK, EU tech companies to have the bank utilize their technologies and be at the forefront of innovation as part of its digital innovation strategy.
I love that about Qatar. I always say, and Saudi is trying to build its own local VC scene by investing in emerging managers from the country and the region. In Qatar, they're doing something different a little bit. They're attracting global VCs to come to Qatar and build in MENA and invest in MENA. And we've seen, as you mentioned, Utopia, they got the Alchemist, Golden Gate Ventures, and they have the Web Summit. They also created the Web Summit. I'm heading to Qatar next week for the Web Summit, and now Builders VC. I wonder if Y Combinator is going to open in Qatar soon or not. I hope they can attract them. They never opened anywhere else.
Yeah, this is a reminder, Ahmed, about the competition. Qatar is making a play to compete with UAE and Saudi Arabia, but from a different angle, which is a healthy competition, in my opinion. I don't know what's your take, guys, but I think the fund-to-fund program in Qatar, which is under QIA, it's not just about investing. It's more about attracting, as you mentioned, top-tier global VCs to the region.
Well, with that, thank you so much, Dana and Feras. We loved having you, and we hope to see you soon in another episode. And Jamie, as always, thank you so much for getting us all this news.
Oh, thanks so much, everyone. That was great.
Thank you so much.